It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
The findings centred on widespread underquoting where properties were marketed below realistic sales prices, along with allegations of dummy bidding and misleading documentation. This will make people in the industry think twice before engaging in this sort of activity. It is not isolated, but it sure as eggs is going to rein in some people who were operating in this space. Being banned for 10 years, that is scary for top performing agents who know that there is no other industry that they can automatically step into to make the vast amounts of commissions that they can annually.
It certainly is. Like, in terms of the overall industry, like, I think a lot of people are looking at this as a moment to take a look at themselves. Are they doing the right things? Are they compliant? But then also just bringing an awareness to something that is pretty well known as well and pretty common, unfortunately.
Yeah, hitting somebody in their wallet, because effectively that is what they have done. 10 years, you cannot operate in the real estate industry selling homes. As I say, very hard to replicate that kind of money. And if you get caught, you could end up with 10 years out of the industry. That does send a clear message. Got to.
Yeah, absolutely. And, it'll be interesting to see if people do, because there's two sides to it, right? Like, there's the ethical side and the unethical side. Those cowboys will probably continue to operate. Like, every few years, there'll be a big case like this. Like, there was one in Victoria a couple of years ago where they were doing very similar practices. Just in terms of the fear factor, yes, it'll have a little bit of an effect, but yeah, it'll wash off in a couple of years, maybe a couple of months, which is unfortunate. And it's just unfortunate for not only vendors, like people selling property, but then the people that are trying to buy property as well. Like, they're wasting their time, especially from the underquoting side of things. They're just wasting their time going to open homes because these people don't buy property every day. Like, they have no idea what they're walking into. They think that the quoted range is a legitimate range and it sells for 20, 30, 40% over that top end of the range. And then they're just gobsmacked. And then they have to start the whole process again. They probably spent money on building and pest inspections, brought the whole family along, and then, turn up on auction day just to miss out.
I mean, for somebody like me, obviously you're dealing in the industry, but I mean, I've been a real estate investor for a long, long time. I hadn't actually heard of that ability to increase the amount of commission, particularly when you got to the funnel end. So it's all pretty interesting stuff at the moment. And I think there's still more details to come. As we say, the New South Wales Fair Trading, they went after a big fish. They wanted to make an example out of somebody doing this. They've done it. It's going to clean up some of these bad actors. Regulators have made it clear that this outcome is designed to send the message, a strong message, that misleading buyers in high-value transactions, it's simply not going to be tolerated. And with properties often being the biggest financial decisions that people are making, maintaining confidence is how homes are marketed and sold, which is critical in the space that you operate in.
Yeah, just going back to your statement around that vendor trying to claw back some of the money. From what I know, they go in and they quote a property. They'll say, it's going to sell for $800,000. And they pretty much will condition the vendor into agreeing to an amount that they know is well below what it's going to end up selling for. So they'll say, cool, are you happy to sign things off at $800,000? They might go into it and say, you know what, it's not performing that well. We might only think it's going to get $750,000. And then they get them to re-sign off all of the authorities. And then what they do is anything over $750,000, they'll say, we'll split with you 50-50. So if we achieve a really good result, any money, so if we get, say, the $800,000 again, we'll split our commission 50-50 with you on that. And the vendor ends up being in agreement to that because they're like, oh yeah, cool. Like, any additional money over the $750,000 we're happy with. And then obviously that agent gets a huge bump in their commissions. And then it ends up selling for, $900,000 and they get $75,000, which is how they can increase their commissions pretty quickly.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
Just on that note, 20%, I'm talking about the price growth with house values in some of different segments, because that's very true at the moment.
Very much so. And it's great to be back. Last time I was here was about 25% ago. So we have been rocketing, booming. The Perth property market is best described as a booming market from the bottom up, which is interesting. This is what's unique in this cycle. It's been the bottom end which has led the charge. Last cycle, we saw the top of the market leading the charge. So it's a different boom this time.
Yeah, stock levels, I don't want to get too sort of bogged down on stock levels because it is a problem everywhere around the country. But across Perth, they are still at historical lows. This ongoing shortage really is preventing any meaningful price correction, even as borrowing conditions tighten.
Yeah, and it's such an important point because stock levels are at about 3 weeks worth of stock. So if we don't get any more listings in 3 weeks, we've got no stock at all. That's the sales to listing ratio. So when we had the last boom in 2008, we got down to 3 weeks worth of stock levels. GFC hit just after Perth hit the highest housing prices in Australia, equal to Sydney's housing prices. And we had 10 months worth of stock level when we had the bottom of the market. So 3 weeks is peak boom time period.
And if we have a look at the median house price as well as the units, let's just break this down, because in Perth, the median house price 1.32 million, annual growth 13.7%, rental yield 2.7, days on market 37 days. Looking at the unit, that really does tell a completely different story. Median price for units around that $600,000 mark, annual growth, 20.8%, rental yields double the house, 6.1%, days on market 42 days. So there's a big contrast, isn't there, between those two asset classes?
Yeah, well, it's unique. Here we are in a booming market, and yet you can't make too many apartment developments stack up at all from a feasibility point of view because the costs are still higher than the end value. So get that. That's an unusual period. I've never seen a real estate boom when you can't make developments stack up. But it's been the unit market that has to rise in value at a greater rate than the costs before we see the feasibilities and hence the supply come on board. So you can still go and buy an apartment today at below replacement cost, assured that no new supply can come out of the ground until prices rise to at least cost plus a profit factor before the developers step in and start supplying the market.
How much of a ongoing problem with the developers that you're talking to at the moment is that?
Yeah, well, people have got the capital and the appetite to develop. We've got a housing shortage and a shortage of properties available for sale. We've got plenty of buyer demand. We're probably starting to reach affordability limits especially in the lower end. But because the rents are quite high relative to the values, that's our insurance policy on our values. The developers want to develop, but just can't get, a lot of the feasibilities to stack up. We're still probably between 5 and 15% away in some instances. It's been the sort of the downsizer market and the luxury market which is stacking up, and so we're seeing some development in that space.
And you say that it's, a comparison of the two markets, the lower end of the market, and that's obviously the units. How many people have just sort of gone zoomp straight into the units? It wasn't the case, I don't know, if you go back 2 years ago, not anywhere near what it is right now. How far do you think that unit market is going to just keep going? Because I'm sure that when we may have been talking last time, it was always the case about units are never going to be as valuable as houses. But hey, it's changing.
Yeah. And look, in some instances, there's always that changeover where if I can sell my house for $1.5 million and buy an apartment for $1 million and put $500,000 in my pocket and off I go, that's always been the healthy sort of changeover level. And in virtually all areas of Perth, that is the case where there is a healthy changeover. Will apartments ever be worth more than a house? I don't think so in Perth, because one of the things that draws people to Perth is the abundance of space and the trade-off of being in the most isolated capital city in the world, but at least you get a fair fair bit of space and an easygoing lifestyle to compensate. I don't think with the hustle and bustle of like a Sydney or an inner Melbourne lifestyle, people come to Perth for different reasons, looking for different things.
Now, a couple of days ago, we were talking about Josh Tesolin's 10-year ban from the real estate industry. And good morning to you, Nathan. Thank you for your email. You have emailed in saying that you were intrigued about the fact that Tesolin is still training and mentoring agents, including many new agents with possibly stars in their eyes who look up to him and his methods. You go on to say that Tesolin will still be profiting off and have his fingerprints all over the industry that he is banned from. It's an interesting point that you raise because on one hand, the ban clearly prevents his involvement in operating or managing a real estate business following these serious findings. On the other hand, it appears that there may still be scope to coach or mentor from outside the licensed environment. While it may sit within the rules, is it consistent with the intent of the ban? This does bring the spotlight onto principals and real estate owners across the industry who ultimately, let's face it, they shape the next generation of agents in Australia. Their role in guiding young professionals, including who they learn from and model themselves on, is critical. And at a time like this, the industry will likely look inwards with experienced leaders setting the tone around standards, ethics and professionalism. And in many ways, it becomes a collective responsibility to ensure emerging agents are being influenced by the right voices moving forward, which by the sound of it, Nathan, is your area of concern. And I hope that that in some way answers your question. Now, if you've got a comment to make, we have that voice recorder below, which is very easy to use, or you can email us at myrealestatepodcast@gmail.com. And good morning, Grace. Welcome on to the Real Estate Breakfast for the very first time. You are a principal and you're in the business of training these new real estate agents. So what did you make of that email that came through?
Good morning, Craig. Thank you for having me. I'd like to say something about when we're training new people, we see the professional level to be a higher level compared to other industry. We like to work with people who are genuinely being in a helpful position to assist those people who really need this kind of professional advice.
Something I want to talk to you about is there's a shift towards this mid-tier suburbs around Brisbane, and we're talking in the $1.4 million bracket.
Yeah, as you can see from the most recent report, the mixture of housing median price is at 1.1, but housing in some suburbs already about 1.4, which is my understanding. The population has been growing in the last 40 years of Queensland, especially Brisbane. 10 years ago or even 15 years ago, when my friend come over from China, she said, oh, let's go traveling around Australia. And we went to Cairns, we went to Gold Coast. We skipped Brisbane because we didn't know about it. Now, because Olympic is approaching and Brisbane's getting more and more famous, and people say, let's stop by at Brisbane, see what's going on there. Queensland also have a very good policy to attract all the skillful people. So they're moving here, living here temporarily, and then decide Brisbane is the right city for them for the rest of life. So as you can see, the population change in ABS September 2025, the figure is showing the net interstate to Queensland is 19,000 something, which means people even within Australia, they like to move to Queensland, especially Brisbane greater area to live in. Things are happening.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market.
A lot of people at the moment, they're trying to figure out when is the perfect time to buy. Of course, we're always saying there is no such time, a perfect time to buy. But when the market is turning, that is, of course, when a lot of people look and say, yeah, probably now's a good time.
Well, it's funny because the majority of people are actually opposite. So people love investing when the market's rising because when they go and tell their colleagues or their family friends, they're all supported. Yes, the market's rising. It's a good time to buy. But when it's turning, or there's a time now when interest rates are rising, there's potentially more sellers on the market, not many buyers. If you go into work and say, I'm going to spend $1 million or $2 million on a property, most of your colleagues will probably turn around and say, don't you read the papers? There's a war going on. The interest rates are going up. The market's going to crash. The world's coming to an end. That's the worst time. But I bought half my portfolio in the global financial crisis of 2009, 2010. That is the best time to buy. So either if you're upgrading or you're building your portfolio, you should be wanting these times, not the boom times, because the boom times, you buy a worse property for a higher price because of competition.
So some of them are searching for off-market and pre-market properties not publicly advertised. They interpret pricing in a volatile Sydney property market. And let's face it, it's a little bit volatile at the moment, where guides especially can be misleading. Also, they conduct suburb-level research on growth, infrastructure and demand. They can shortlist properties aligned with client strategies and budget. Boy, that list, Chris, it goes on, doesn't it?
It is. It's lots of different things for lots of different people, depending on if they're time poor, if they're an armchair investor, if they're buying the family home, and I guess how much money they've got to spend as well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.